bear market, this is the time we tell you people to sit tight and watch the market closely.
Hey guys, welcome back to our channel here at Financial Hub and another episode of our Forex market breakdown. I believe it's episode 41. And today I'll cover Euro USD and a few other pairs. So we've just not done this pair in a while. And since in quarantine and since many people like analyzing the Euro USD, understanding what is going on in the Eurozone and also in the US, today I'll do a Forex technical breakdown and look at it how it is. I'll do an in-depth look at it on the subscription page tomorrow, so I won't skip and show where all this has come from. We'll just get straight into the meat where we are right now. So something we need to pay attention to what is happening at the moment is that the market is sort of in a consolidation phase. So what I mean, if we take the market and look back at this level, if you see this part, I'm highlighting this level here. If you take a look at that, we consolidated for about since the beginning of 2015 January, and we came out of the consolidation mid 2017. So 2.5 years we were within this consolidation before the market started shooting back up. Ever since we go to that trend line, which I can show you, we had that 1 bounce, 2 bounce, 3 bounce, so and now 4th bounce, which is a beautiful bounce. The market has been heading down, respecting that triangle, and now back into this consolidation phase. We entered this consolidation, let's say officially like around end of 2018. So now market, since we broke below this level around 1.145 level, this region is what I've highlighted. Around that level is when market has come back down, and ever since we broke, since when was this, since around 2019, early 2019, also around March 2019, we haven't seen the market come back to this level. We spiked up above to this 1.145 to touch that level, in line with our trend line, as you can see this one that I've drawn here, which is in line with Elliott wave analysis, which I'll do a better in-depth look at it later on tomorrow. But this is what we are currently looking at. This is the formation that is happening at the moment. If we go down to the daily chart, because that was the weekly chart, we can now get a better look at this formation. So basically we've seen we're bouncing the downward trend line. So we had that 1 bounce, 2 bounce, 3rd bounce, and we currently had the 4th bounce. Upside we also have the 1, 2, and now we got that 3 bounce. So now market is sort of back into equilibrium after pushing up, coming back down, and now sort of it's gone back to the midpoint. If you take Fibonacci, you can also see that's around the 50% Fibonacci region. So as you can see, we have the 61.8. Market was going back to touch that level. If we take the midpoint of the Fibonacci around this level, so you can see market is playing around this level. So that's what we're looking at right now. And if you take the pivot points, which I was analyzing with my partner today morning, you can get to see that on the daily chart, market is sort of retracing back to the P level. So currently we retraced back to the P level, broke up above it, had a retest, market started pushing all the way up. We got to touch the 1.145 level, then market has started pulling back down to the P level. But that's not something I want to focus on right now. I want us to look at the candlestick formation in line with Elliott wave analysis. So if market is able to continue pushing back up, we're able to maintain above the P level on the daily chart as well as on the hourly chart, which we'll look at. We can see market had this sort of counter trend line, which market can push further up to go back to that level if we get that momentum back to the upside. And that basically we're talking about dollar weakness. So if we go to the 4-hour chart and just look at it more clearly, what you can see is sort of this formation. So when this sort of channel and market has been moving up, let's go to the down one. Yeah, sorry about that, guys. So this is what we have on the channel. So basically we've been forming that. If you take our Elliott wave analysis, which we can Elliott wave numbering, which we can take that 1 2, get that 2 3 4, we can get a push to the upside. So we can get one final push, maybe go touch the 61.8% level, or even the 78.6 Fibonacci level. So that's basically what we are looking at right now. That's why I've highlighted this zone, and why I've really highlighted that zone is because of also in terms of our pivot point. So that's in line with the R2 and market above that side. So if you get that push to the upside, if you get the momentum, dollar weakness during the week, we know later on this week we have the NFP being released, so that's something we should really pay much attention to. We'll be getting that push to that level. If market is able to break above the 1.13 level, this level will be pushing further up, but I'm currently looking for market to come 1 2 3 4 5, get to that level, then get some momentum to the downside. I'll cover a long-term perspective on it tomorrow, which I'm looking for the Euro USD in the long term to continue heading south, but we wait and normally see what the market tells us. So that's basically what I'm looking at. If you get at least an entry over here, if you take our P level, we can see wait for market to touch the P, maybe spike that level. What we can look at is that we're looking for a risk reward, because once market starts coming below this level, starts trading below P, would be since if market starts trading below P, it will be going against our analysis. But if we continue well, so this is what we'll be looking at, a risk reward of it's pretty high, pretty steep, 1:6, maybe with longer stops, because if market gets to start pushing below this previous support level, and in line with the P level, will be nullifying our analysis. What we're looking at, this higher high, higher low, higher high, higher low, higher high formation. So basically that's what I'm looking at on Euro USD. There's still potential for this market to break down. I'm still 50-50, so I'm looking at it at this level, see what will really play out. But for now, I'm looking at that push to the upside. If not, if we get that dollar strength, then I'll be pushing and looking for a trade to take this pair to go to the downside, especially if we close below P and market starts pushing down with momentum. So that's basically what I have on EURUSD, and let's look at Aussie dollar. So this is Aussie dollar, as you can see. We covered this pair last week. Last week it was trading around this down level. We looked at it pulling back to get to that 0.61 level, 0.60 level. So we can see market beautifully broke above that level, closed above it, and at the moment the 0.61 level is acting as a support level. Very, very important to pay attention to that level. So if we maintain above this point, market can still be within a bullish level. I remember I was saying last week that I'll be looking to short this pair around this level. That's still what I'm looking at. But if you go down to the daily time frame, go down to the hourly time frame, you get to see a sort of different reading. So what we can see is that market was pulling towards, it was being attracted back to the 61.8 Fibonacci level, in line with that 78.6 Fibonacci level as well, but market hasn't yet reached that level. And why is that? It's because we're sort of getting a consolidation around this level. You can only pay attention to that if you go down to the 4-hour chart. So remember, we're always doing that top-down analysis. Up, you're seeing the bigger picture, what is happening, and you start breaking down to see what is really happening and how to get your entries and trades. So this is basically what I have. So we sort of have this channel formation, which to me, this is sort of an ABC correction, which I'm looking for market to be capped somewhere before we get that push to the downside. As I was saying, just like in the Euro USD, I'm looking for that short-term dollar weakness and long-term dollar strength because of the times we're in. So I'm also looking at fundamentally what is going on. We know the dollar is a safe haven. The coronavirus is affecting everywhere. We're about to enter the month of April. The first quarter of the year is about to end. Many companies, many people will be looking at their quarter, how their first quarter has performed, and I believe many people have seen it as negative. We saw WHO. How does WHO come into this? We saw the IMF officially report that we are in recession at the moment. So That's why I'm saying I'm really looking for long-term dollar strength at the moment. But for now, just short-term dollar weakness to the upside. So also on this one, I'm looking, as you can see, my AB. So on my B to C wave, so I'm looking for that 1, 2, 3, 4, 5. I do not expect the fifth wave to be really strong. So if you go down to the 3-hour chart, you can also get to see what I'm talking about. So the consolidation I was saying, this is what we're seeing here. We're seeing sort of consolidation. Today morning, market spiked levels below our support level at this region, touching the trend line beautifully at 1. It spiked levels around 0.675 level around there, which was a previous resistance, previous support, as you can see, and market has shot back up to that level. At the moment, we've gone up to touch our Friday highs. So we can see here's where we had our Friday highs, where we formed our third wave, and now that's where we are right now, sort of gaining to forming that fifth wave. We can see we've not yet touched our Fibonacci level 61.8 at that point, in line also with our upward boundary of the channel. If you go down to the 1-hour chart, so this is what you can see. So as you can see, I've labeled stops above this level, so I'm sure many people are taking and looking for a short trade at this level, which you can see that's what had happened. You can see many traders have already taken the short positions, intraday trades, and which is a beautiful short position, because if you had entered around this level, you've already taken a short, you've already taken about 50 pips, which is not bad for intraday, especially on this pair. For we know the dollar doesn't move that much within the day. So market was pushed down and we saw the bulls come, so we might still see the bulls pushing this market a bit further up. That's what I'm currently looking at. So still looking maybe for that push to the upside, maybe to that level, before we get that push to further down and the market starts dropping. So from that level, then we start going down, but still yet we can still pay attention to this level. Market might be capped to that level, so we can get a short trade from that level. So basically, I'm not taking any trades here. I'm waiting to see if market drops back. I'm waiting for it to come out of this range. I do not like participating in when the war is happening between the bulls and the bears. So I like to watch what is happening, what pattern is forming, what are people really anticipating, and who's really winning in the market. So I do not like participating in the fights. I'll just wait for them to bleed out, and I'll take the trade of the winners, the people who emerge out of the trade. So I'd remember that I'd done an article on this. We're looking at both sides, which side the pair was to go, and you can see we're still not getting that direction. So I'm having this other bounce from here. So I think the market really being rejected by these two levels. So it's much better to just wait and see. We've seen market breach this level. We might continue seeing it breach. As you can see, if we take a trend line and we draw that like that, we can see market, if you not really ignore, but if you factor in that this was the actual support of this trend line, we can see market is sort of playing within that level. So we're yet to see how this pair will play off. So that's what I'm looking at on Aussie dollar. So short term push to the upside and long term look to the downside. So apart from that, let me look at USD CAD and we'll wrap it up for today. Yeah guys, so now we're down to USD CAD, last pair, one of my favorite pair. Most people know that if you've been following our channel, that I really like USD CAD. Always analyzing this pair. Most of my videos, this one and Aussie dollar. I like how it forms, I like how it respects key levels, which I'll cover a bit right now. So just a follow up from last week, we can see that the market came and sort of found rejection at that base, that top level 1.46, 1.45 region, in line with this trend line as well, this upward channel, or rather diagonal expanding triangle to the upside. We can see market bounce tier 1, 2, 3, 4, 5, 6. So that's quite steep, having a bounce 6 times, and market came back down. I remember from last week's video, you can go look at that video, analyze it, see how we analyze the market. We're looking at this pair and we're looking for the pair to fall to 1.40 zero level. I remember talking about that very, very clearly, and that's exactly what happened. That doesn't mean I'm right all the time. No, that's not what I mean to say. But what I mean to say is that market respected our analysis, what we were looking at, and how it played out. So long term, also this one, we're still yet to see how pair will continue reacting to this level. Better looked at on the daily chart. So here's where we get the daily chart. This is what is giving me a better analysis. I remember I shared on the subscription page earlier on this week that such a formation can push the market back to this level, retest this level before we get any decision of where we're going. We're sort of in a bullish tone on the USD, so this can also continue to push back up. But what we're currently looking at right now at the moment, before we get any move to either direction, if we go down to the 4-hour chart, this is what we're getting. So I remember I shared this on the group earlier on Sunday. So we have that 1, 2, 3, 4, 5 beautiful move. So now we're looking for pair to continue moving to the upside. If we get that push maybe to dollar strength, maybe at most we can continue pushing at least to break this channel to the upside if we continue the dollar strength, because we can see this is a full consolidation, a full complete wave of the of the correction. So that ABC, so we can see that one was beautifully complete, and market now is pushing to the upside. We did open with a gap on Monday, so we can see here there's a gap that hasn't been closed. We don't panic when you see such things. Market can go all the way up and come and close later on, so no rush to close that. Now market is continuing to push the upside. We can see this bullish candle came with a lot of momentum, broke our previous supports at 1.415 level. Market has been trading ever since above that level, not closing below it. So you can see we spiked below, and market is still pushing to the upside. So if we go down to the 3-hour chart, let's look at what is happening. Sort of still a consolidation. So what you're seeing here, if you go down on the 1-hour chart, you can see it beautifully what is happening. This is exactly what is happening. So we're having that sort of consolidation, channel formation, sort of formation. So we can have that A, B, C, D, E before maybe you can get a drop from here going down, or market can continue pushing up. But that's not what I'm really paying attention to right now. I'm just looking at if the US dollar gets strength, where will we be heading, or if it gets weakness, where are we heading. So that's really crucial to look at right now, to pay attention to. If you take the pivot points and plot on this one, what we can see is that market is bouncing off the P level. So here's where we get the P, where you're seeing that 1.415 in line perfectly with our key level that we had plotted. So if we maintain above this level, we can see the market push further up and continue going, maybe first targeting our downward trend line. If we're able to break that, maybe to continue to the upside. But for now, that's what I'm looking at. If this pair gets to continue pushing to the upside, that means we're getting US dollar strength, and on the other side we're getting so that means this one will be going up, the Euro USD. If it gets strength on the US dollar, we'll be looking for a bearish tone, and also on the Aussie dollar, and I've covered all that. So that's what I'm looking at. That's what I have for you guys today. More cover up on our subscription, which we've been trading with our traders on that. As we said, it's only $35 a month. We can make money as we can always make money as we're quarantined at home, and always make trades, profitable trades. So far we've covered a few weeks, about 2-3 weeks. So far we've looked at different pairs, and we've made profits so far on USD, CAD, on we made on gold. We're looking at gold as well as Aussie dollar. So USD, CAD, gold. We also covered Euro USD, but now this is the pairs we're looking at today. Tomorrow we're going to do a follow-up, tell our subscribers where we're entering and sharing all that, where we're exiting, and how we're managing the trade. So be sure to come and join us on there. We're having a good time analyzing the markets, discussing where need be, and looking at where the market is heading right now. So that's basically what I have for you guys, and have a wonderful week as you stay quarantined at home.
Beep, beep, beep. economic recession and a bear market.
This is the time we tell you people to sit tight and watch the markets closely.